See, I'll explain the topic first and then we'll have the objective questions because explanation of that topic is also important over here. So watch this video till the end. Okay. Firstly, download Adda 24/7 app on your mobile. In this app, you'll be getting all the premium study materials, plus live classes, plus ebooks, plus tests. Whatever you require, you'll get it over here. Okay. So don't go here and there. Join the app. Okay. Join the classes. Okay. Subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting two things. Number one, all the updates on JIB and CIB, all the updates, latest ones, and also number two, you will be getting is free YouTube series on on all the subjects of JIB and CIB. Okay, so subscribe to it. Click on the bell icon immediately. These are the two new batches. Okay. All the four subjects ABM, BFM, ABFM and BRBL are covered. Bilingual and English, both of them cover all the subjects. Join them ASAP. 80% discount is going on. Double validity on Mahapacks is going on. What are Mahapacks? Mahapacks means 15 plus batches for each and every subject. Okay, use thing. Okay, I'll show you at the end how to use this code Y432. Never forget this code Y432 because it will give you 80% discount. Okay, let's start. What is the monetary policy? Basically, see this. Every 2 months you will be listening or viewing on the television that or even in the financial newspapers now that RBI announced its monetary policy. It's actually called two policies, credit and monetary policy it's called as. Here the word actually which RBI announces is credit and monetary policy. Okay, it is that way. So it includes both. Okay. Credit and monetary means creation of credit, understand, and monetary means basically money. Okay, both remember cash money and credit money are important elements of the financial system. Okay, every 2 months RBI announces the credit and monetary policy, and there it basically changes what? It changes the repo rate, CRR. Okay, whichever. This is mainly to target the short term money this money difference, okay, or liquidity. Okay, so monetary policy is the process by which the government, central bank or the monetary authority of a country controls the supply of money, availability of money and cost of money or rate of interest in order to attain a set of objectives oriented towards growth and stability of the economy. Now importantly, remember, we'll just break up these words, okay, in which the government, number one, central bank, number two, and monetary authority or monetary authority. So why are the three words mentioned over here? In India it is announced by central bank. Okay, central bank means RBI over here. Got it? But in some countries they don't have a central bank. So there directly the government will announce it. Or they have some other body. That body is given the job of doing this monetary policy. Okay, so majority all the developed countries or developing also, they have this monetary policy, this central bank. Okay, but some banks might not, some countries may not be having it. So either government or central bank or monetary policy, whichever authority is given the job of issuing the controlling the money in that country. So what are the three jobs? Supply of money. See here, controls the supply of money, means how much money should be supplied into the system. Okay, how does it bank decide on this? Central bank decide on this through CRR. Important one, CRR, and second is repo. CRR and repo. Okay, availability of money. See here, once you control the supply of money, immediately the availability of money will also be controlled. Means how does it work actually? Okay, I'll show you through an image only. Okay, see this, it's like this. Look at this red image. Okay, how does the financial system work mainly? RBI is a main generator of money, you can call it. Okay, it issues the currency and issues the credit system through bonds and treasury bonds, various bonds. Okay, through repo bonds, everything. So it will issue the money, and if it reduces the CRR rate or repo rate, more money will flow into the banking system. Okay, so this bank, when it gets more money, what will it do with this money? It will give it to the customer through lending. So what will the customer do? The customer will spend it more. Spend it more means what? It will lead to two things. One is growth and second is inflation. Both the things will be affected. Okay, so this is the way it moves in the financial system. Okay, RBI is always the generator of money, either printing of money or credit money, both of them. Okay, so coming back, see this availability of money, cost of money or the rate of interest. Here, rate of interest and cost of money will always be decided by these two factors only, CRR and repo. Always, mainly repo. Okay, in order to attain a set of objectives oriented towards growth and stability of the economy. Okay, I am saying repo. What is this repo? Anyone understands? Or otherwise, what will happen? I'll go on and then you'll say, sir, what is repo? Okay, who can type in the comment section? What is repo? Repo is the rate at which RBI lends to the banks. Okay, over years. Look at this. RBI gives money to the banks at repo rate. Okay, so that is called as repo. Got it? Okay, CRR means cash reserve ratio. It is a percentage of NDTL, net demand and time liabilities. Okay, monetary theory provides insight into how to craft optimal monetary policy. Now, monetary theory means what? What should be my rate of CRR? What should be my rate of repo? So this is decided by monetary theory. Now, what is this monetary theory? Remember, you have, it's very simple. You have that ISLM curve in your AVM. ISLM curve. Do you have that? Anyone remembers? Anyone has done this? Investment, savings and liquidity preference money curve. Money preference scheme curve. Okay. So, money curve they got. Investment, savings and liquidity preference money curve. Okay. So, this ISLM curve is basically the point on which any bank, any central bank decides what should be the repo rate, what should be the CRR rate. Very interesting topic. I have taken it separately. Okay, so there we'll cover it. ISLM, because this topic itself, ISLM curve itself, is a topic of around half an hour or 1 hour. Okay, so basically remember, this ISLM curve is used to design or decide what should be my repo rate, what should be my CRR rate. Okay. Expansionary or contractionary policy. So when an expansionary policy increases, the total supply of money in the economy, a contractionary policy decreases the total supply of money. Now, why is this RBI following this expansionary and contractionary? Look at this. Again, go to this image. In this image, you will see that RBI, if it reduces the repo rate, see this. Earlier, let's say it is 4%. Now, if it reduces to 2%, what will happen? What is repo? Repo is the rate at which RBI lends to the banks. Okay, RBI gives money to the bank. It's a sort of loan. Okay, RBI is giving a loan to the bank at 4%. Now, if it reduces the rate of this loan to 2%, what will happen? Bank will say, oh, rate of interest is reduced. So, it will take more loan from RBI. It will take more loan from RBI at 2%. So, what will happen? Bank will have more money because it has taken a more loan from this RBI. So, it will have more money. What will it do with this more money? It will give more loan to the customers, because bank's job is only two. There are only two jobs of the bank: take deposit from the customers and give loan to the customers. So, it can give loan to the customers. It will give more loans to the customers. What will happen with it then? Customer will have more money. If customer has more money, what will happen? He will spend more. If he spends more, if he or she spends more, then it will give rise to growth. Number one, good thing is it will give rise to growth. Means economies will grow, companies will grow because more consumption. But this will also lead to inflation. That is also a negative part. Here, growth and inflation will always go in hand. Growth is a positive thing. Inflation is a negative thing. So both go hand in hand. That's why RBI, whenever it increases or decreases the repo rate, it always sees to it that neither growth should be too fast nor inflation should be too fast. Okay, so both of them, they have to manage it. Got it? So that's why RBI will decide go on contractionary policies. Here, if the inflation and growth is very huge in any economy, so what will RBI do? RBI will move in the reverse direction. If its repo rate is 2%, it will move to 4%. Then bank will get less money from RBI, because 4% means what? The rate of interest has increased. So bank won't take more money or more loans from RBI. So if it doesn't take more loans from RBI, what will it do? It will give lesser money to the customer. So customer will spend less. So the inflation will be reduced, growth will be reduced. Both the things will be affected. Growth means GDP, remember, okay? And so this will be known as what? Contractionary policy. When RBI increases the repo rate, it is called as contractionary. But if RBI decreases the repo rate, when will RBI decrease the repo rate? RBI will decrease the repo rate when the growth in the economy is too slow. It's not happening at all. Right now in many countries you might be seeing this. US, the bond yields are down. Okay. So US, UK, all of them are suffering from negative growth. So in that case, what does the central bank do? Central bank reduces the rates of their treasury bonds, okay, or repos, okay. So once it reduces, it will give the bank at a higher amount. Means bank will purchase more loans from this because the loan rates are reduced. Bank will lend the customers more, so customer will spend more, so inflation will be more. So that's known as expansionary policy. Remember this: expansionary and contractionary, important policies, okay. Expansionary policy is traditionally used to combat unemployment in a recession by lowering interest rate. Got it? Lowering the interest rates, okay. While contractionary policy involves raising the interest rates in order to combat inflation, isn't it? Got it? Clear? Monetary policy is contrasted with fiscal policy, which refers to government's borrowing and spending and taxation. Means what? Monetary policy will always be in conflict with fiscal policy. Fiscal policy is given by whom? Remember, fiscal policy is always given by government, finance ministry. Okay, finance ministry. I'll just write ministry over here. Okay, MIN. So by FinMin we call it. So fiscal policy is always given by FinMin. In FinMin, what happens? What do? In fiscal policy, they focus on growth, more on growth. They want more growth because after all, it's a government. It wants more growth. But whenever growth is more, it will always lead to inflation also. What did I tell you just now? Both of them go hand in hand. So what is the job of RBI now? Under monetary policy, it will try to control the inflation, control it. So now what happens because of this? If it tries to control inflation, even growth is controlled. So these two policies, fiscal and monetary, will always contrast each other. But the best solution is the government and the RBI should always work in tandem, hand in hand, so that neither growth is too much nor inflation is too much. Okay, got the point? Okay, let's move on to the objective questions. But before that, look at these classes. All the 4 subjects ABM, BFM, ABFM, BRBL are covered in the classes. Okay, 80% discount, double validity on Mahapacks, numericals, objective questions, case studies, everything is covered. Use the code Y432. Always remember this. Okay. Now it's a question time. Bank rate is also referred to as, means what is this bank rate? Discount rate, subsidy rate, marginal rate, none of the above. So what is this bank rate called as? Everyone, yeah. Bank rate is given by whom? It is given by RBI. Okay, RBI. RBI always gives 2-3 rates. Okay, one is bank rate, then it is repo rate, then it is CRR, then this reverse repo rate, right? So it gives both the many rates as such. So what is this bank rate called as? Discount, subsidy, marginal. Okay, let's narrow down to this: discount or subsidy, 1 or 2. 3 and 4 are out. Okay, so 1 or 2, discount rate or subsidy rate. Here subsidy is given to whom? To the customers. Discount is always given by, discount rate is always the rate which is given by RBI as a bank rate. Always remember. What is the bank rate? Basically, here when RBI discounts the bill of exchange, understand this, at bank rate RBI discounts the bill of exchanges of the banks. Okay, exchange of the banks. Okay, this is the rate at which RBI discounts the bill of exchange of the banks and gives them money. Okay, this rate will always be higher than the repo rate. Okay, got it? Expand OMO. What is OMO? open market operations, open market organization, open monetary operations, and none of the above. So what is this OMO? Everyone, yeah, let's see. Open market operations or open market organization, either of these two, one or two, or open monetary operations. Okay, one or three. Let's go to one or three. Okay, so it is everyone. It is what? Open market operations, OMO, open market operations. What is this OMO? Under OMO, RBI will, see this, RBI will do both the things, buy and sell of the bonds. Okay, so whenever RBI buys the bonds, it gets bonds from the banks and it gives money, so lends money. Whenever RBI buys the bond, it lends money, okay, to the banks, and whenever RBI sells the bonds, so it will get money from the banks, get money from the banks. Here always this is from banks only. Okay, so this I'll converge it to banks over here. So it's always the relationship between the RBI and the banks. Okay, it's like this lending relationship. As the bank gives loan to the various customers, RBI also gives loans to the various banks. Okay, same logic is followed. So whenever RBI gives loans to these banks, lends money, it takes the bonds, security. Whenever RBI gets money from these banks, so it will sell the securities. So that is known as OMO, right? There are two schemes, main two schemes. One is OMO and second is MSS. Okay, MSS, marginal standing facility. Okay, they call it MSF or MSS also, marginal standing facility. Okay, so this is compulsory in terms of it is done when it is in extreme situations, but OMO is done regularly. What is meant by monetary policy? Now this is the basic question. What is the monetary policy? The process by which Parliament controls the money supply. The process by which central bank or monetary authority controls the money supply of the supply of money. The process by which international market controls the monetary supply, money supply. So what is this A, B or C? D is out. Okay. So what is this A, B or C? Parliament or central bank or international markets. Quite obvious, isn't it? Who does the gives the monetary policy every 2 months? Okay, it is given by, type fast, it is given by whom? Government or RBI? It is given by RBI, isn't it? So RBI is the authority that will always check and give the monetary policy. The process by which central bank or the monetary authority of a country controls the supply of money. Okay. What is the difference between the real interest rate and nominal interest rate? Now what is this real and nominal? Understand this concept very clearly, okay? Always remember, there are basic things over here. In nominal, okay? Nominal. Nominal means no base year. No base year. That's the basic rule. And real means base year. It is compared with the base year. Base year comparison, I'll call it. Comparison. Okay. Comparison. So always, whenever it's in case of both interest rate also, inflation also, everything. I have nominal inflation also, real inflation also. I have nominal interest rate also, real interest rate also. But it means one and the same thing. Let it be interest rate or any this inflation or anything. Whenever I talk of nominal, it means no base year. Whenever I talk of real, I compare my present given figures with the base year. Base year can be anything. Here, RBI can decide on the base year. Government and RBI together decide on the base year. Okay. So, coming back, real interest rate takes into account inflation. Nominal interest rates are those which apply only to borrowers and not lenders. Only one, only two, both 1 and 2, and none of the above. So what is this for? Nominal real interest rate takes into account inflation. Means how is the inflation counted? Inflation is counted with the base year comparison. So whenever you compare anything with the base year, then that is called as real. So that one is true. Okay. Second one, Nominal rates are those which apply only to borrowers and not lenders. So nominal rates are not applicable to lenders. What is nominal rate? Without any base year, right? So is it not applicable to the lenders? Lenders means what? Banks, NBFCs, anyone. So aren't nominal rates applicable to lenders also? So that is false. Okay. So the correct answer is only one. Okay. Nominal rates are applicable to both borrowers and lenders. Got it? Now one for your homework. When a foreign currency is fixed and the value of the home currency is variable, it is called as what? Foreign currency is fixed. Understand this. And home currency is variable. So in this case, let's look at our case. $1 equals to, let's say, rupees 80. Which is the foreign currency? Type fast in the comment section. Which is the foreign currency over here? Everyone. Which is the foreign currency? Dollar, correct. And which is the this Indian local currency? Rupee, right? So here if you see, whichever currency is to the left of the equal to sign is always fixed. Whichever is to the right of the equal to sign is always variable. So here what is happening? Who is fixed? Here it is dollar. Dollar is fixed. So whenever we have something on the foreign currency on the left side, it is called as direct rate, indirect rate, cross rate or variable rate. This is what you will have to answer. Tomorrow I will answer it. Okay. Okay. Chalo. Now let me show you how to use this code Y432. Okay. Go to Adda 24/7. How to go? Okay. If you are having the app, go on the app. In app you will be getting 1% extra because of there is a coin system. Okay. So go to Adda 24/7. Click on the first page, JIB and CAIB. Okay, you'll see the JIB, CAIB Mahapack, CAIB 23. Click on CAIB 23. Okay, clicked. Now you'll see the batches. See this CAIB BFM, then complete batch. Then this is also complete batch. Click on this English batch, complete. Okay, you'll see the details. What are the dates? What are the timings? Then what is the study plan? Okay, everything you'll get it over here. Recorded videos 24/7 available. Ebooks are available. Okay, 2 interactive classes, so you can ask the questions there and then itself. Okay, now let me show you the fees. Okay, 23,999. Click on view offers, put the code Y432, Y432, click on apply. Now look at this, 23,999 reduces to 4,799, 80% off. Such a huge discount you are getting. This opportunity won't last long. 80% off is not for every time. Grab it immediately. You can go for the Mahapack also. I would suggest go for the Mahapack only, because in Mahapack what happens, you get 15 plus batches for each and every subject. So how to go for the Mahapack? Go to Adda 24/7 again. Click on JIB and CIB. You'll see this JIB CIB Mahapack. Click on now CIB ka Mahapack. See this CIB ka Mahapack. You have clicked it. Okay. Now look at this. When you have, you will get the details over here. What are the details? 15 plus batches for all the CIB subjects. Okay. Then case study batches are there. Then definitely tests are there. Ebooks are there. You will get everything over here. Okay. You can go through this. Of course, recorded videos are available. Now click on 35,996. Look at this fees. Now click on view offers. Never miss the offers. Okay. Always click on offers first and then go further. Use the code Y432. Click on apply. Look at this. 35,996 reduces to 7,199. 80% off. And look at the validity. Validity is 12 months. So 7,199 divided by 12 months, roughly 600 rupees per month, divided by 30, roughly 20 rupees per day. Right? 20 rupees don't we spend on our tea expenses? We spend around, you just go for single tea break, 50 rupees are spent. And this 20 rupees will give you lifetime investment. Okay, so go for it immediately. I would always suggest you should go for invest for the life. Okay. Now why am I stressing on these batches? Because look at this, the portion for CAIIB has changed. What is the new portion? Look at this, 4 compulsory subjects: ABM, BFM, ABFM, BRBL. 4 compulsory. My God, ABFM and BRBL are new, so that's why follow them immediately. Okay, follow the classes. Electives: rural, HR, IT, central banking. No retail elective. So that's why you'll be needing a guide. Negative marking is removed, so that's a good thing. Subjective questions are there, so you'll have to write something over there. Okay. Chalo. So I'll take a leave now. You should join the batches ASAP because portion is new. Okay.